Hey guys, in this educational video, we'll discuss how to treat the triangle. First, we'll discuss the basics behind this pattern. We'll discuss what is the meaning of this pattern. We'll discuss how to identify that and how to treat it. Please don't forget to like this video and subscribe to my trading view page. So we want to start with the basics traders. There are a lot of types of triangles. And in this video, we'll discuss the ascending and descending triangle. First, let's start with the ascending one. The point is, traders, that with the ascending triangle, we are looking for the market trading in the bearish trend. Yes, our task is to patiently wait for the test of some important horizontal key level. Once it is reached, the triangle formation, the ascending triangle, may help us to catch a potential market reversal. When the market reaches important structure, you should closely pay attention to the price action. Your first task is to identify the initial retracement, the first bullish movement from key structure. Then the market finds some resistance, yes, and from that we see a bearish continuation. But the point is that the price doesn't manage to reach a current level and instead sets a high level and returns back to the resistance. Then we see one more attempt to go lower, but again the price sets high level. And here we have a perfect example of the so-called ascending triangle formation. This pattern is a classic reversal pattern, and most of the time it means the bullish accumulation. The point is, traders, that here with this pattern, we see the weakness of sellers. We have this very strong resistance right here from where sellers are selling, and with each consequent bearish reaction from that, we see that bearish legs are becoming weaker and weaker. Yes, and it definitely indicates about the exhaustion of sellers. But the pattern by itself is not a trigger for us to buy the market. What we're looking for is a breakout of its horizontal neckline. Yes, we are patiently waiting for its violation and candle close above that. Once it is broken, only then on a retest or aggressively we open trading position expecting a strong continuation, bullish continuation. Most of the time, we set our stop loss below the lows of the triangle, but if you are more aggressive, you can also set your stop loss below the last highly within the triangle. Yes, so that is how we set the stop loss, like the entry. And for targets, we usually look left at some key level. Yes, for example, right here we have some important key levels, so our target is based on that. Same thing with the descending triangle. Just the situation is the opposite. We are patiently looking for the market, trading in a bullish trend, and reaching some important resistance, we analyze the price action. Our task is to spot the initial strong bearish reaction from that, with the consequent attempt to go higher and the formation of the level high. Then the market drops, sets equal low again, and retraces, setting a new low high again. Yes, forming the classic descending triangle formation. Yes, here it goes. And it's always the trigger that we are looking for right here to sell is a breakout of its neckline. Once it is broken, we set our sell limit order on the retest or just sell aggressively expecting a bearish continuation. Stop loss is set at least above the last level high or conservatively above the highs, with your target being the closest key structure. Right? Now let's discuss the example. Analyzing WTI crude oil, I spotted a perfect example of such a triangle. And here on WTI crude oil, This triangle is a trend following pattern. So you can see that here we are trading in a bearish trend and trading in a bearish trend. Yes, the market was consolidating for some time. Yes, the market found some support, and from that support, we got quite strong initial bullish reaction and then quite weak bullish reaction. Yes, and the price was sitting the level highs. Yes, forming this perfect triangle. Then the price violated the support of the triangle. Market closed below that, and now we see a retest. So what we'll expect here on WTI crude oil, we'll expect a bearish continuation to lower structure levels. So traders, triangle is a very classic price action pattern that I really want you to learn. Yes, this pattern is very accurate. Yes, and if you learn to identify it correctly, you will see how efficient that pattern is. Let me know in the comment section what pattern do you want to learn in the next video, traders. Also, please like this video and subscribe to my trading view page.